On. Hope you guys are doing excellent today. Um, Martin Matthews here, joining you guys. Just got a couple of some messages this week. We were on with some clients and friends of ours. They have a business called Couples Academy. So they actually help a lot of couples in different areas. Everything from infidelity, strengthening marriages, all these different things. And so we are their advisors. And so they had us come onto the show with them and discuss a few different things. We talked a lot of great stuff. So we'll be sharing some of that soon. But the reason I want to hop on here today was there's something I say, and we covered that on the live stream I did with them this morning. And it's basically if you're trying to get uncommon results, you want to build uncommon wealth, you can't do common people shit. And everybody's like, well, do what the wealthy people do. I want to be wealthy, so do what the wealthy people do. Yeah, it sounds logically you're like, yeah, that's what I should do. But most people don't actually know how to implement the stuff. First of all, they don't actually know what wealthy people do. When I came to America, that was one of my biggest things I wanted to learn about. I survived a war in Africa. I came to America. I was like, okay, there's got to be people with money. What do rich people do with their money? And nobody could fucking show me. Nobody could show me because the majority of people were not rich, so they couldn't show me how to become rich. So I thought everybody in America was rich. When I came from Africa, I came to America because I would watch all the movies. What does it look like when you think about this? You're living in a war zone, right? And then you watch American movies. There used to be this some things in Liberia where I was born called video clubs. The video club was basically somebody has an old VCR with a TV, and they have like some movies, and you could go there and you could watch like two or three movies like back to back, and that's how people like sometimes spend their time. So whenever we had like some free time, we'd go to the video clubs and watch these movies. So you're sitting there watching these American movies, and then and in the movies, like they got this big house, they got multiple the husband's got a car, the wife's got a car, the teenagers got a car, they're going to these schools. And I'm like, damn, they must be rich. So when I came to America, I thought everybody was rich. I thought everybody was making at least $100,000 a year. At least that's what I thought. And so I come to America and I realize the people aren't rich. They're not rich. It just looks like they are. So, so it's like, damn, so the car is like, okay, so they don't really, I thought you bought the house. Okay, listen. In Africa, when you bought something, you literally bought it. You buy it, okay? You like pay for it in full, you buy it. Over here, you finance it. That's a difference. You don't actually buy the house until 30 years later, you made all your payments. You just feel like you bought it. But that's the reality of what goes on here. And so I thought everybody was rich. I wanted to understand how to become rich. My country I was born in is the poorest country in the world. Poorest country in the world. I always do air quotes for that because it's not really a poor country, but the people make the thing poor. The people who are in leadership made the country poor. All right, so it's the poorest country in the world, twice in a row, 2 years in a row, poor country in the world. Of course, I'm interested in how to create wealth. I look at where I came from, dude. I want to know how to build wealth. So I come to America and I look around and I'm like, okay, I thought I would just start asking people and they would just tell me, oh yeah, you just do this, this, and this, you become rich. And nobody could actually show me how to do it. And then after being years in America, I met a guy who was in the financial industry. And I'm like, okay, do you know rich people? He was like, yeah, I know rich people. It's like, I was like, what do they do with their money? And that guy was the first guy who started to show me stuff. And then I ended up working with him. When I realized rich people don't do common people stuff, think about it. If you're trying to have uncommon results, like maybe you got a business and you're having some great success and you're trying to get heightened levels of success. What's up, Sonny Fit? What's up, our real estate journey? What's up, T-Flow Photos? So look, if you're trying to have uncommon results, why would you do things the common person is doing? Why would you do common people stuff? If your goal is to have uncommon results, why would you do common people stuff? So I realized that, okay, so how could I even put myself in the same class? Like one of my buddies was talking about this the other day. We were talking about the whole phrase, it takes money to make money. It takes courage and it takes balls to make money. Okay. there's tons of examples of people who had no money who made a lot of money. It doesn't take money to make money. It takes balls to make money. It takes confidence, courage, things like that is what it takes to make money. When you get the money and you're trying to multiply the money, that's when it takes money, right? Because a lot of people are trying to skip steps. You're like, I want to make a lot of money. Okay, you then got exchange. That's how you make money. If you want to multiply money, it's a different skill set. And the things that make you good at making money is often not the things that make you great at multiplying money. It's a different skill set. Some of you just take excessive risk with your money and you think that's what's going to build wealth. Big balls sometimes, my friend. Somebody on Facebook said that. Yo, that's what it takes, man. Look, damn, I'm about to say something weird. I was going to say women can have balls too, but nowadays when you say that, that's like a weird thing these days. Balls is an analogy, okay? It means you have courage, you got cojones, you're going to go out there and make something happen. Women can have, they can have courage, okay? Anybody can have courage. A kid can have courage. You can be like, you ever heard that phrase? Look at the balls in that kid. They don't mean that literally. They just mean the kid has courage. He's going after something he wants. So uncommon results, you need uncommon strategies. And so the reality is sometimes the things that really, really wealthy people are doing, you may not have access to it. You don't even know they exist. And it's not because they're keeping it from you. It's because you don't have enough resources for the price of entry, right? If somebody's raising $100 million to go take down real estate, or they're raising $10 million or something like that, and everybody's got to put in $250,000 or $500,000, everybody's got to be an accredited investor. Why would they waste their time telling you about it if you've got 10 grand or 15 grand or 25 grand? They won't even tell you about it. So understand, if you're trying to do things and you're wanting to get heightened levels of success, you've got to be around and not do cookie cutter stuff. So I'm talking to the people who, like, you've built something. Maybe you've got a business, you've got a high income, you've achieved something that's higher than your average income earner in America. That's who I'm mainly talking to here. In that scenario, you have to start thinking about different strategies and not the cookie cutter stuff that everybody gets. The vast majority of financial entertainment is what I call it. Financial media advice is not catered to a high income earner, is not catered to a high net worth individual, is not catered to you, because that's not the vast majority. Think about it. If you're a publication trying to get a bunch of readers, who are you going to talk to? Are you going to talk to the very 1%, or are you going to talk to the masses? There's more readership in the masses. So most of your financial content that you see online is not catered to you if you're a high income earner or if you aspire to be a high net worth individual. It is catered to the masses. They did a bunch of studies on this, and they do it because if they talk about things that's catered to the 1%, you won't read it because it will be out reality for you. You're like, why am I even going to talk about this? It's funny because I have a video where I talk about why Jay-Z and Beyonce, they're billionaires, but they have mortgages on their properties. And this video triggers people. People are like, well, this is not blah. This is for rich people, blah, blah, blah. I'm like, yeah, that's why a lot of times information that's marketed to the wealthy is not made available to the general public, because it is going to be out reality for you. You're not even going to agree with it. You're going to be like, that's not even me. So you're going to tune it out. So in order for publications to get your attention, they have to think about it. What did it say? Is money? What did the articles talk about? Is money going to make you happy? What's the average income in America? Average income is this. Why are they talking about that? Because they're trying to get your attention if you're in the masses. They want the eyeballs of the masses. So that's what they talk about in financial media. It's a game. So if you cater to the masses, you eat with the classes. So understand that if you are an affluent individual and you have a higher than normal income, if you aspire to do that and like, dude, I want something uncommon. I don't want the common results. I don't want to do what everybody else is doing, etc., etc., etc. If that's you, I'm actually going to do a webinar. It's not going to be streamed online. I'm going to do a webinar this Friday. It's going to be about beyond the cookie cutter and how to get tailored financial strategies that will enhance your wealth. Tailored financial strategies. What very, 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 very wealthy people do is they need their wealth so customized, they set up their own companies to handle their wealth. They set up foundations. Yes, they use trusts, but they set up foundations, use trusts, and they set up something called a family office. Michael Jordan has one. A lot of very successful. All these billionaires have it. It's an entire company that is established is an office that's set up to manage that family's wealth. You understand? Because they can't do cookie cutter shit. So your average financial advisor is going to give you cookie cutter solutions that they provide to everybody else. And they may have one little specialty, and that's their specialty, and that's what they try to offer everybody. Okay. If you are a high net worth individual or you are a high income earner, there's different considerations that you have that is different than the average person. And you realize that. Maybe your business is different. It's in a specific industry. Maybe you're trying to create an exit plan. You've been building this business for years, and you know this business has to be worth a few $1,000,000 or whatever it is. And you're looking at, okay, if a private equity firm came to buy me, it doesn't matter if it's a white collar, blue collar. I know private equity companies that are buying up HVAC companies and bundling them together. So you could be blue collar. I know private equity companies that's buying up vet offices, veterinarian offices, because vets is a huge market in America. Millions of people, tens of millions of people own pets in America, and they care about their pets. So the veterinary industry has been identified by private equity firms as a place to go to acquire. So if you're like, and I just one example, there's tons of these kinds of different examples of private equity going to very specific areas and buying up and bundling these businesses together for the cash flow. They want the revenue and the cash flow. Now, if you have a business and you're trying to one day sell and exit your business, wouldn't it make sense for you to set things up properly so that in the future you can acquire the highest amount of money for your saleable business? So on a webinar we were talking about earlier, our client, he was looking to acquire, he was going to buy a business. And he loved the business, thought the model was great and everything, wanted to go buy the business. Their books weren't right. They weren't producing revenue that they said they were producing. The books were in disorder. This happens all the time. That's why I said the skills that make you good at building and driving a business and making money is not necessarily the skills that takes you from there to the heightened levels of success. Because it's a different skill set. You're focused on driving revenue, driving everything into your business. And sometimes it's chaotic. You don't always have time to get all your books and everything right and all that stuff. But when somebody's coming to buy your company, they're going to do extreme due diligence on your company. And one of the things we help our clients to do is business valuations. How do I know what my business is valued? 98% of businesses in America have zero idea how much the business is worth. You spend all your time building this asset. It's an asset, right? You spend all your time building this asset as a business, and you have zero idea what the value of that asset that you spent years putting your time, effort, and energy into is worth. Are you even investable? Can somebody come today and say, I love your business model. I would love to buy your company. I've got a big checkbook, but I need to check out your books. I need to make sure everything's in order. Do you have your personal financial statements? Do you have net worth statements? Do you have the balance sheets of the business? What's the valuation of the business? Do you have intellectual property? All of that stuff. What's the credit rating of the business? All of those things. Somebody looks at that and they're like, you don't have that in order? Dude, they're like, dude, you're not investable. I can't invest in your business. You know the deals on Shark Tank? When they make the offer and the people accept the offer on Shark Tank, watch at the end of the episode. There's a disclaimer that says they have to do the due diligence. A lot of those deals on Shark Tank don't actually materialize because the people who go to pitch their deals on Shark Tank don't actually have their shit together. And so they don't get funded. You understand? You're trying to take it to the next level. You got to have things in order. Imagine if you don't have it in order and then you spend 15 years building a business and then you miss out on millions of dollars because somebody passed up on acquiring your company because it wasn't in order. Now you have to go back and you have to fix everything that you could have done from the beginning. Those are some of the things we talk about when I talk about you have to go beyond the cookie cutter solutions that traditional financial people are going to provide for you. Because most financial advisors will not consult you on your business or how to increase the valuation of your business. What are the steps you need to do, the things you need to take, marketing game plans you need to come up with, where are you at in your business? Have you ever done a business analysis to see where's the plus points and minus points of your business? Where you can see that on a chart and say, okay, these are the plus points. If my business is above this amount, I know our profitability is going to be higher. This is how we're going to increase our profit margins. These are the things we need to do for a marketing game plan, all of that. So I'm going to do a webinar where I talk about strategically, how do you go beyond like cookie cutter solutions? If you want to attend the webinar, it's a free webinar. It's going to be on this Friday, the 12th, Friday, May 12th at noon Eastern time. Send me a DM if you want to be on that webinar. And then share this out with people if you like that content. Like our content, share this out with people. But you've got to move beyond the cookie cutter, the different things. You got to find specific things that work for you and your family and your group and your business, what you like to do. I have clients who hate the stock market. They're like, dude, I will never put $1 in the stock market. We have some clients who just, that's not their thing. So if my only thing I'm trying to tell them to do is you need to buy an index fund, that's not going to work for that guy. The guy's like, dude, I'm never going to buy an index fund. That's not his play. He's like, now what I want to do is I want to build my HVAC company up, and I want to acquire that HVAC company down the street in the next town over. I want to acquire a bunch of those and bundle them together because I got a model that's super efficient that allows me to scale HVACs. That guy's not going to buy an index fund. You get it? So if you're working with financial people who they just have one cookie cutter solution for everybody, and that's the general advice, do this, buy this, understand that is an indication that they cater to everybody, the common. If you're trying to achieve uncommon things, you have to cater to people who deal with uncommon people and different solutions. Part of my skill set is I flow power to our clients. Flow power to our clients in everything they're trying to do. Everything they're trying to do. So we've got clients who are raising capital to buy. One of our clients is raising capital to do developments in Tennessee. Right? He's already bought the land, everything. He's got the deals and all that. So it's like, hey, he's raising capital for that. And so it's like, that's exciting to me because it's an opportunity zone where you can get tax advantages, right? So we utilize strategies like that. So you've got to look beyond the common thing that you're being told by everybody, because the results that you're looking for is not common results. You're trying to achieve something greater in your life than average. Maybe your goal is you're not trying to be average. The worst thing you can tell me is like, oh, this is the most popular thing. If it's the most popular thing, why would I want it? Why would I want why would I want the thing everybody else got? I mean, do you want the chick that everybody else got? Think about it. Who wants the chick that everybody else got? Or who wants to, I mean, I'm being like a little bit extreme with that, but like, think about it, you know. What Jay-Z said, she's like a bus route, everybody rides her. Oh my God, my wife's gonna come and like tell me to stop talking. But look, why do you want the thing everybody else got? Why don't you get the thing that fits for you? Right? Get the thing that fits for you, not the thing everybody else got. So in order to do that, you need to customize your game plan and say, look, this is my goals and aspirations. We have clients who his goal is to acquire a bunch of barbershops. That's his whole game. He's barber. He's like, dude, I don't even know the stock market, man. I don't know that game. I know how to cut hair. That's my game. So I'm like, dude, why are you trying to master stocks if your game is cutting hair? Why don't we create a game plan for you to buy more barbershops? He's like, I know barbershops. I know the cash flow. I know how to market them. I know what to do with them. I'm like, great. So we literally created a game plan for him to go acquire more barbershops. Think about it. You start acquiring barbershops, you start putting his operational efficiency into more and more barbershops. Guess what? You got a barbershop franchise. You got a barbershop. The only barbershop franchise I know suck. It's like Great Clips, Sport Clips. They're all the same fucking thing. They're all owned by private equity firms. A lot of them are, by the way. They do a bunch of them to buy, and people buy franchises. There's nothing exciting about them, okay? But you start adding some flair. You start adding your own spice and flavor to it, and people are like, you know what? I like this type of barbershop. I'll go here. I'll go do that. So that's customized. So you got to move beyond the cookie cutter things. Yeah. Bimmer Boy B, I think that's what it says. Great. McDonald's isn't going to start selling tacos. They know their specialty, they know their deal, and they specialize in like, hey, this is what we're going to do, and this is our area. So when you start looking at that from your wealth building, you have so much opportunity to build wealth in your own skill sets. That's why our biggest thing is, why don't you invest in the things that you know and that you're good with, and then how do we like scale those things? Well, we've got some friends in like self-storage. They specialize in self-storage, right? That's their deal. Like experts in self-storage. So when our clients are like, hey, I want to get into the self-storage space, that's who we would direct them to and say, let's go over here and let me show you how these guys are doing self-storage, and then how you can capitalize on those things. We have another friend of ours who does mobile homes. I interviewed him. We're editing the interview. We want to show that to you guys. Specializes in mobile home parks. All right, thousands of lots that they're on there, and that's what they're building. He's like, this is the specialty. This is what we're gonna do. So we've built a fantastic network so that we can be able to customize things for our clients, whatever it is the person's trying to do. We have another client who buys and sells multifamily. He holds them for like 2 years, 2-3 years, and he exits. You know, he like continually has these big liquidity events where he ends up with large amounts, and then he deploys that into other assets. He's just been doing that for years. That's his play. You understand? So he's not trying to do things like everybody else. You have to start looking at, how do I do things the way I want to do them? How do I work with, number one, advisors who understand what I'm trying to do? How do I strategize to play the tax game efficiently? The whole tax thing is just a game. It's a game. You understand? It's a game between a bunch of politicians and lobbyists, and you're in the fucking middle, because you can't really influence changing the tax code. You as an individual, unless you have enough money, you as an individual cannot influence changing the tax code. But what you can do is you can benefit from people who have lobbied for certain changes in the tax code. For example, there was something called I don't get caught up in politics. Right? I like economics. Politics can suppress economics, right? I'm not red, blue, I'm not whatever. I am for who's going to create the environment for me and my people to succeed. And my people are all the people that are in my environment that I can influence. My family, my business people, my associates, all of these, you people, you're all my people, right? I'm trying to link up with people who are my people, who think with my mindset. I don't get trapped in the whole political thing. You're Democrat, Republican, all of that. So there were tax cuts, and some of those, there's something called a bonus depreciation. So depreciation is where you can write off over a number of years an asset that you buy. Like, real estate, you can depreciate over a number of years. But then some of the tax cuts allow you to depreciate everything in 1 year. So people are buying planes. They could write off the entire plane in the year to buy it. So they were literally paying zero taxes. You understand? So you could literally benefit from people. Somebody lobbied for that. You understand? Some rich people who wanted to buy planes and jets and other shit, who had a lot of money, lobbied for certain things in the tax code. The tax code changes all the time. So industries will lobby for certain things. Real estate industry will lobby for certain things. Opportunity zones is areas that needed economic development. If you buy real estate in opportunity zones, you get a tax deduction. Well, how did that come about? Somebody lobbied for it, okay? So when people lobby for certain things, you are like, damn, They're on it. They're changing something in the tax code. Let me see how this can benefit me. But if you're so busy running your business, how are you going to be paying attention to the tax code? You're not. The tax code is a game of people lobbying for shit and politicians giving them shit. That's it. And so the majority of the tax code actually is explaining to you how to pay less in taxes, how you can qualify for different deductions. But if you're not doing tax planning, you're missing out. So you overpay your taxes. Half of business owners already believe they overpay their taxes anyway. So what are you going to do about it? So I'm going to cover some of that on our webinar on Friday. I'm going to go over on a webinar why you need to move beyond cookie cutter solutions, why you need to start thinking strategically about building wealth and about all these different things, and how do you work with people who understand moving beyond like cookie cutter, general advice, put your money, everybody should put their money here. Anytime somebody tells you everybody should put their money here, that's a major red flag because you're not everybody. Your situation is unique. Why would you do the thing everybody is doing? Inflation, somebody asked my thoughts on the inflation report. I think it's a bunch of bullshit, honestly. I think they're going to end up, I think they're going to pause. First, they're going to pause interest rates because they were raising it too fast. Dude, they had like, I don't know, like a dozen or 60, a dozen like rate increases all back to back to back to back. Dude, it takes time for the shit to work. So I think they're going to pause. They're not going to keep increasing rates. So I think the prices are still very high in terms of, you know, just where pricing is at. Just people going to the grocery store to feel that. It's not like milk prices went down by like 20 or 30%. The shit's still high. So average person is feeling this stuff, but they're not exactly sure what to do about it. Yeah, they don't want to kill any more banks. Yeah, dude. Look, the unfunded liabilities, banks are in trouble big time. And they don't want you to know how much they're in trouble. Because if you really realize how much banks were in trouble, you will pull your money out the bank. And that will actually cause the reality of you seeing the banks got no money sitting there. So they got their shit tied up. And they don't want you to believe that, you know, your money's, they don't want you to believe that that your money's kind of not really there. You realize when you deposit money, you're giving the bank a loan. So your money's not really there. And if everybody went to go get their money, everybody will realize that the banking system will completely collapse. So as a result, they backed up those banks very quickly. And the shit always, pay attention, the shit always happens on the weekends when you're not really watching, right? So SVB, over the weekend, the shit went down. Everybody was on Twitter, like, you guys got to back up this bank. Boom, boom, boom. Monday, they're like, okay, we're going to handle this. Same thing happened with First Republic. Shit happens on like Friday evening, Saturday on the weekends. It's when the shit goes down. JP Morgan swoops in, buys them at a discount. Boom. All of a sudden, you didn't even realize what happened. So that's what's going on, guys. It's all a game. It's a game that really, 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 really wealthy people are playing at a very, very high level. And you got to understand, you don't want to be the negative effect of that. You want to be in position to where you can capitalize on it. And it requires you to kind of think a little bit differently, not with like the traditional thing everybody's doing. All that kind of stuff. There's a few questions. I answered some of the questions here. They don't want to kill any more banks, dude. It sure don't. I think they're going to pause. They're going to pause rates. I think at some point, probably towards the end of the year, they're going to lower rates again. And they're going to start doing it because, you know, business are going to be like, shit, dude, we need access to capital. We need different things. People aren't buying as much real estate because people are looking at interest rates without realizing that, look, interest rates were high in the 80s and people still bought real estate. So people got so used to real estate and the interest rate being low that it impacted their ability to buy. Buy an asset because you think it's good, not just because of interest rates. What's up, Norma Angelica? She's in real estate in California out there. Let's see. They're going to make it out where you can't get more than 10% out. Yeah, there's a lot of countries where you can't get a certain amount of money out of your bank accounts. So I'll talk about that. I'll talk about the importance of having other asset classes, gold, silver. Felipe is like keeping money in life insurance policy. Yeah, money's compounding. Money's in a life insurance policy compounding. You can leverage that to buy real estate, leverage that to buy other assets, leverage that to acquire businesses. There will be more and more businesses that come up for sale. There's tons of businesses now. Baby boomers are retiring, so there's tons of businesses that's up for sale that you can utilize. True. So look, the thing is, and also one of the reasons you guys may or may not know, one of the reasons we store money inside of life insurance policies. Number one, life insurance policies by themselves operate with different financial standards than banks do. So banks by the way keeps collectively hundreds of billions of dollars inside of life insurance policies. They store money inside of life insurance policy. Anybody can look this up. It's called bank-owned life insurance. Why would a bank own a life insurance policy? They own thousands and thousands and thousands of life insurance policies, and they store a lot of money in there for different reasons. They use it for executive compensation. They use it as a source of capital for the banks, all that kind of stuff. So they don't necessarily tell you about that, but if you can look at any bank's balance sheet, Wells Fargo, Chase, JP Morgan, if you look at a balance sheet, which most people have never done that before, you can look at their balance sheet and you can see where they keep life insurance assets. I did a video on this. So they store their money inside of life insurance policies. Life insurance policies operate with different rules. Life insurance companies' balance sheets are stronger. Life insurance companies don't make money the same way banks do. Banks make money by just lending a bunch of money out to people. And that's how they got to make their money. So they only keep a fraction in reserves. Life insurance company is one of the reasons Warren Buffett is one of the richest men in the world. Is because life insurance companies have so much capital. Warren Buffett, when he bought Geico, I don't know if you guys know that Warren Buffett owns Geico. So Warren Buffett owns Geico. He bought it for something called float money. Float money is because when you are handling risk for people, you have to have massive backups, massive amounts of money, massive reserves to handle unforeseen risks. So insurance industries are the most fucking scared people in the world because all they do all day long is think about risk. We got to protect against this risk. so they're like, we got to have a balance sheet strong. Okay, so that's how they think, man. They think all they look at all day long is probabilities and risks. So they like, dude, we got to keep our balance sheet strong. We went to a conference with this insurance company, and they're like, we got so much money in our books. They went and got a $750 million line of credit. They're like, we got so much cash, we're gonna use this cash to get an additional line of credit. Why? Why did they do that? Because they're like, dude, we don't know what could happen, so we need to have a $750 million line of credit so that we can like deploy that if we need to. They have so much money on their books. So they deal with risk and handling reserves. Also, insurance companies also have insurance on themselves. There are insurance companies that specialize in insuring insurance companies. That's a whole nother category. So understand, insurance companies are a lot safer than your banks. Insurance companies are very well ran and operated. They've been around 100+ years. They survived all kinds of different economic cycles. People die all the time, yet insurance companies still survive because they get secure. They secure their stuff, and especially well-ran industries. So anyway, I'll break down all these kinds of different things. The whole theme of our webinar on Friday. Send me a DM if you want to be on our webinar. It's Friday, noon Eastern time. I'm going to talk about beyond the cookie cutter, how to move beyond traditional financial advice, how to use tailored financial things that are tailored to you, that you have access to, that customized to you, so that you can use that to expand your wealth. Thanks, Bammer Boy. I appreciate that. So, hey, send me a DM. DM us. We'll connect you with how you can get registered for it. And you can hop on our webinar. I'll go into some details. For webinars, I can do screen shares. Can't really do that on Instagram Live. But I can do screen shares where we show numbers. I show different things, show concepts, show you what we're doing, what we do for our affluent clients. We have a lot of wealthy clients. Some of these guys are very private about their stuff, but sometimes they allow us to like show different aspects of the things they're doing, the things we're helping them to do. So I'll show some of that on this webinar. So anyway, we'll look forward to seeing you then. If you have any questions, send us a DM and we'll get you registered. All right. Thanks for watching, guys. Talk to you soon.